What's up, guys? JJ Fade 23. I haven't made a video in a while, so I'm gonna make one real quick. I usually make these off the top of the dome, so bear with me. I just want to go over a few things with SPY. Guys, as you guys know, I trade SPY as always, only certain setups. Either show me the level or, using the 10-minute EMAs. Show me the level and come back to it, 10-minute EMAs, or, range breaks, or extended, like gap down, like the multi-day gap down and multi-day gap up. So the other day I took 2 trades on SPY. As you guys know, guys, and normally in any stock, I think it's better for you guys to wait. Not small caps, obviously, a lot of trades are right off the open, but in large caps, I think it's better to wait the first 10 or 15 minutes to let things settle down, let all the market orders and craziness get filled. But as you guys know, guys, just like right here, 1, 2, 3 days gap down, I pretty much will take the inverse trade every time on a 3 or 4 day gap up. So like we said in the Discord on Friday morning, SPY gapping up, 1, 2, 3, 4th day gap up. If you get a 4th green day gap up, I'll short that every time. I will literally short that every time because the risk reward is insane. And the win rate is super high, but even if the win rate was 50-50, I'll take a 1 hour loss to gain 4 or 5 hour, 10 hour, sometimes more. I don't care. I'll take that trade every time. The only time I don't short a 4th green day gap up is never. I always short a 4th green day gap up, and I always long a 4th red day gap down, right? So it's just, I'll take that all the time. So our plan was here to be watching for an entry at the open, because look at how big, first of all, guys, number one, as you guys know, as everybody knows, I use the 4 EMA a lot for reversals. Guys, if you're not using the 4 EMA, you're crazy. The 4 EMA, guys, I say it all the time. Look, the 4 EMA is such a tight EMA. The stock comes off of it, it comes back to it. It comes off it, it comes back to it. It comes off it, it comes back to it. If you're using the 21 or 50 or 34, whatever, look, it only comes back to it every once in a while. So it's not good for reversals. It's good for reversion to the mean, right? If you get too far off it, but how far is too far, right? Like, is it going to come back to the 21 right here? No, it goes high. Is it going to come back to right here? Yes. But the 4, it comes off it. It comes right back to it that day or the next almost every time. See, riding up the 4. Even when a stock is going super high, it's still usually riding up the 4, touching it. Then if it makes a gap off it, it comes back to it, right? Gap the next day. Gap the next day. Look at this. It comes off it this way, it goes back to it. Comes off it this way, it goes back to it. So I already know, okay, 4 green days. Gap up. We also want the gap up, to the best gap ups to have enough room back to the previous day high. On the 4th green day, it doesn't really matter because we usually break the previous day high. But if it was a day 2 gap up, look, we want the room to be big enough to come back to the previous day high, because that often holds. Very, very quite oftentimes on a 2-day or 3-day gap up, it holds the previous day high and then keeps grinding. But a 4th day gap up, that has a lot more room to drop, especially when the 4 is, look, 346. We were gapping up to 352. We have 6 points to drop back to the 4. Never mind the fact that I almost went to the 21. All right, so how we trade it? All right, let's turn the pre-market data back on, because I use the pre-market data on for the 1-minute and 5-minute chart. So right around here, I was kind of bumming out, like, damn, SPY's filling the gap already in pre-market. Then whoop, now it starts to go back up. All right, so I did make a mistake with puts, and I smashed it with shares. But I did make a mistake with puts because I should have gave it a little more range, and I read into the price action a little too much, which I'll show you guys what I mean. All right, so one sec. All right, so what I did was, guys, right here, all right, I'm looking at the pre-market high as always. I know we're big gap up. We're way off the 4. I know that we have room back to the 10-minute EMAs. We have room back to the daily 4. We have room back to the previous day high, right? I know all these things. So right here, the market opens. When we pop up right here, we kind of did like a fake breakout of the pre-market high right here. See this? I always mark the pre-market high, also daily pivots and stuff. But when SPY popped up right here, it started to dump back down quickly. I entered puts right here. Now, sometimes, you guys, I'll use a lot of puts and put my stop rate above. Other times I will, all right, it pains me to stop out on a fourth day gap up because I know what's going to happen almost for a fact. So I don't want to get wicked out or like tricked out when I know it's going to dump. Eventually, even if it goes up $1, I know it's going to come back down. It's the fourth green day. It has like a 90% chance to come back down. So what I did here was, instead of using a small enough size or that I could have a wider stop, or using enough the amount of options that I don't care if they expire worthless or I'm right, what I did was I got overconfident on this rejection and I put too much size. And when it came down right here, I'm not going to start covering right there. I'm looking for a huge trade back to the daily 4 and back to the 10-minute EMAs. So I was just letting it play out. We came back up here, right? And I'm like, damn. Now, I still had my stop rate about usually, guys, what I do is, if I short around 52, I put my stop. If my stop is going to be over this candle, but that candle is at 652.25, or say that candle is right here, I'll use the next $0.50, all right? So I sized off using 652.50 because I put on more size than I probably should have. Anyways, if I just let the trade play out, it would have been fine. But what I did was, it came back up. When I saw this candle go like this and then instantly bought back up, I just cut the trade even because I thought for sure this was going to squeeze like crazy and be one of those crazy scenarios where SPY's just going to squeeze farther than I think and be wild. So I screwed up. I moved my stop down and got stopped out even right there. And then instantly, huge kill candle. So now I'm out of puts, but now I'm watching. Now, guys, what am I doing here? So, guys, I don't talk about this a lot, but when it comes to SPY, I do trade. I like to let the first 15, 20 minutes play out and check the range, right? Because this happens a lot. It's a pretty good, honestly, it's a basic setup. I mean, some people call it opening range breakout or breakdown, or just, if you just, all you have to do is mark off the opening range, right? 5, 10, 15, 20 minutes, whatever. So you know the range. And usually all the madness usually dies down by after the 15 minutes. So you're like, okay, we have a range. Let's say we call this is the high. All right. This is the high and this is the low. Right here, this is the low of the first 15 minutes, right? 5, 10, 15. So guys, this does a fake breakdown also of the 15-minute low. So I'm like, damn, and it wicked back so fast. After seeing the fake breakdown, the elevated volume, and just the way that candle closed, I still shouldn't have moved my stop, but I did. Anyways, instantly this candle opens and bang, closes below the first 15-minute range, right? Huge kill candle after a long... When you get a huge bearish candle after a long candle like this, that pretty much says, okay, this thing's done. So what did I do? Instantly, this came down. Once I saw this close right here, guys, this is what I like about the ranges. And now the 5-minute EMAs are all crossing down. 4, 8, everything. As soon as I saw this close below that candle, and after I noticed how big of a kill candle was, elevated volume, totally gave back all the long buys right here. Just totally evaporated this whole candle in one candle. As soon as I saw that come down close, this candle opened. As soon as it bounced right here and I saw it stall out right here at this range and start to go lower, I started shorting right here. Now, when I start shorting right here, my stop will be right in somewhere inside this range, because if this went like this, if I start shorting right here and then this candle comes up, closes back inside this range, starts pushing, then obviously it's not working. So basically, guys, as soon as I start shorting right here, I put my stop just above this opening range, so not really much risk, right? You're talking about 651, maybe risking like 50 cents, and then boom, it starts dumping, right? Dumping. And at this point, guys, I'm just covering, scaling out the whole time back to the daily 4. Now, the thing is, you guys, you see the volume. Look how high the volume is on these. The volume's increasing this whole way down, increasing. This is what you want to see when it breaks down and starts going. The volume's getting bigger and bigger, stronger and stronger, right? I really traded shitty, honestly, Friday. I moved my stop on those puts. I started covering way before my targets on this because I think I was pissed off that I did that. You know how you get when you're like, even me after all these years, guys. I shouldn't have moved my stop. I did. And then it dumps. It starts to dump. I start covering because I'm like a little distraught. I can't lie. I was mad at myself. And look at my chart. This is ridiculous. I mean, my plan is to cover at the daily 4, which was down at like let me see here. I mean, the daily 4 at the time, it went down. The daily 4 was at 646. Like, what are you, an asshole? The daily 4 is at 646, and I start covering literally like, I mean, honestly, like $1 before I added, and then I covered some of that ad right away. Then I try to justify it by saying, well, I added heavy, so I'll cover some. No, I should have added right here. I should have been adding all right here. This should be no covers. These should be all ads, not covers. This is how, like, pussies trade right here. So, I added, took off a tiny piece, took off a little more because 650 is a whole dollar. I thought 650 is a round cycle level. I thought maybe it will bounce and I could add it back, but it didn't bounce. It just kept going, so I scaled out. But still, it's just all around shitty trading, if you ask me. Because what should this should just look like? It should have looked like short enter right here on my puts, cover my puts down at my target, short enter right here on my shares, cover my shares down at my target. That's what it should look like. So that's not what it looks like because, even when you've been trading for as long as me, which is 7 or 8 years, you can still sometimes get mad at yourself and do stupid things, Not stupid things like I'm going to blow up my account because I'm not stopping out, but retaliation, not even retaliation trade, because I don't take trades outside my playbook just because I'm mad. But if I do take another playbook trade, I might cover early because now I want money that I freaking should have made. Things like that, little emotional things. But anyway, guys, the other thing I wanted to show you, it looks a little more difficult, right? You have to get used to using bigger time frame. Like, say if you're using the 5-minute chart, I don't like to use the 1-minute chart by itself on large caps or SPY. I want you to notice something, though. See the trade, right? Again, you see how it looks like I just chased that candle down? Like, this candle closed below the 15-minute range. This opened and started down. But it looks like I chased it down. But that's because, guys, that's because I'm using the 1-minute chart when I enter. So the 5-minute candle closed below the range. This one looks like a bullish candle. You might not want to short right there. But when you're watching the 1-minute chart, right, at that same spot, guys, look. So the 1-minute candle closed below. It bumps back up. This 1-minute candle closed below. Now I'm watching. I know the 5-minute candle closed below. I'm watching the 1-minute. When this opens, now see, I'm not shorting right there. It looks like I chased that other candle down. That's because I'm waiting right here. As soon as we broke the low of this candle, I start shorting. Now I know we're validated, staying below the 15-minute range. So if you're just trading the 5-minute chart, all you see is a 5-minute candle open. It starts to come back up. You short. How do you know it's not going to just wick all the way up and go that way? Well, you're looking at the 1-minute chart at the same time. The green candle looks pretty bullish, even though it was on lower volume, but it looks pretty strong, so I wait. This opens. That's like a I don't know what you're going to do candle, and then boom, big red candle takes out the low of this. That's where I pretty much start shorting right there. And then, guys, the other thing is, look at this. If you have your 1-minute EMAs on, look at it ride down the 1-minute 8. Why are you covering anything, right? You shouldn't cover anything, not till your targets anyway. But even if you were not even looking at targets, just using the price action, you don't want to cover it. No candles, 0 candles close above the 1-minute 8 until right here. You could have probably stopped it right there, or maybe right here on that bullish candle, the volume increasing right there. But other than that, no siree. Or you could even use the crossover of the 4 and 8, right? Look at the 4 and 8, they cross over. I'm sure people trade like this, right? You crossover, you enter. I don't use crossovers as entries because look, crossed over right there, you enter, you get stopped out. But I don't use it for entries, but I'm not opposed to using it for exits, right? Look, you just watch the 4 and the 8. Watch the 4 and the 8. They cross over right there, you're done. You also see the bullish engulfing candle and the volume increase. You're done with the trade. Guys, if you took this trade right here, took that candle low break, you put your stop right here. At this point, honestly, on this trade, you can use a little wider stop if you want, but you could have put your stop right here. 651.44, that means you would have it at 651.52. Because you don't want to stop out right in front of whole dollars. So even if you put it at 651 or half dollars, half or whole dollars, you don't want to stop out in front. Even if you put it at 651.52 and you entered at 651.12, you're talking about 40 cents, you guys, right? The 51.12, the stock goes down to 45, we'll call it $6. You're talking about at least 10, 12-hour trade, all right? So you can now lose 12 times in a row and you're still even. That's not going to happen. This is why risk reward is so important, guys. if you smash big risk reward trades, you can have a 30% win rate and still be profitable. Just have to stick to those good risk reward trades. And this is why I don't love styles of trading that are like super wide stops, because then you're getting only 1 or 2 trades, and now you have to have a pretty high win rate. I mean, not really. I guess if you have a 2 if you get 2 trades, you really only need a 50% win rate. But the more risk, the more odds you get in your trades, the better, because your win rate doesn't have to be that high, even though our win rate is pretty high. But still, I mean, that feels pretty good when you nail a 10 trade. And now you're like, oh, house money, right? Now I'm not that nervous next time. I can lose 10 trades in a row, but I'm not going to do that. But still, that's how easy it is if you stick to the process, right? So, the other thing, guys, if you use the daily 4 or 10-minute EMAs with the pre-market data off. 10-minute EMAs with the pre-market data off will give you good targets. This one blew right through it. But in general, usually when I short, guys, above the 10-minute EMAs, I'm shorting back to the 10-minute EMAs. When I long stuff like this, I'm longing back to the 10-minute EMAs. I don't usually short this. I'm not going to short a second day off the bottom. But, this was over here, we had 1 second day down, big drop. You can take it back to the 10-minute EMAs. Take it back to the 10-minute EMAs. Take it back to the 10-minute EMAs, even though that's not a good short. But I'm just saying they do track well. Stocks go back to them a lot. So this blew right through them. But in general, as you see again right here, 10-minute EMAs. So, basically, guys, I do like that setup for SPY. It helps you settle down and wait for the first 15 minutes to go by. And, I traded it the other day too. Right here, you guys, look. This was a different kind of version of it, but 5, 10, 15 to 20 minutes. Mark out the range. This is the low. That's the high. A little bit of a different this time. We had the 5, 10, 15 minutes. When I saw this huge volume and rejection right here, I shorted and covered into the pre-market low. And then when we got this fake breakdown, I took off the rest. I would have, if this broke down and held, I would have held more. But once I saw this nasty fake breakdown of the pre-market low, the other thing you could have done on this, guys, if you wanted to wait for it to break the range, I usually mark these different too, guys. Like if you're using the 15-minute range open, and mark the pre-market low different colors so you don't get confused. The other thing you could have done, guys, is right here when you saw this 5, 10, 15 minutes, it's still staying inside the range. Right here, the candle closes below the 15-minute range. Now, Wicks bounces back up, wicks off the EMAs with a pivot right here. That wasn't a bad trade for a decent scalp. As soon as you see this start to reject, you short with your stop rate above. And you could look, even on a little trade like this, you guys, it pops up. You have confluence here. You have the EMAs. You have the pivot. You just had huge sell volume candles down. This wicks back up. If you start shorting when this starts to reject, 38, 35, whatever, you're only risking 10, 20 cents. And then even a flush like this, massive hour trade, and you're done for the day. The bottom line is the trades get a little easier as you wait after 15, 20 minutes. And then you see. And because if you took that trade, it wicked back up. Now look what happened. It pushes back up. Now, guys, look, the 15-minute range high is right here. Look at how many times it wicks off that for the long, right? Just let it set up. Mark off your range. And then, if you want to mark off your range in the colors that the trades become easier because you know what you're looking at, right? You know what you're looking at. You're letting it set up, and you can use that as support and resistance later in the day. So I like to use that along with the 10-minute EMAs, the daily EMAs and hourly EMAs, as you guys know, plus my fibs. But on SPY particularly, I do like to let the range play out and then see what it's going to be. If it's going to be a trend day to the downside, upside. Usually, guys, what happens is one of the trades, usually it's either going to be a breakout and retest, something like that, a breakdown, retest, something like that, or a fake breakout of the high of the range and come back down, or a fake breakout of the low in the range. So this actually offered you multiple chances to this wasn't really a fake breakout trigger, which you could have shorted. But right here, the fake breakdown and reclaim, you could have long that. And then the breakout and reclaim, you could have long that. You don't want to make your trading too crazy with too many things are going on. Make it simple. I only use EMAs, Fibonacci's, and then pretty much ranges and like candlesticks patterns. I don't even use like all the other stuff that I used to like study anymore, like the squeeze and all that shit. Friggin' all this crap that piles up down here that takes your attention off the actual true volume, what you should be watching, right? True volume, and price, the most important things. All the other shit, really just gonna make you looking at too many things. Oh, the market's open, and then you lost. So, anyways, that's pretty much it. Just wanted to go over those trades. Have a good, happy Sunday. See ya.